I observe a moment when even the world's most successful private aerospace company must surrender to the mathematics of scale, and what I'm witnessing in SpaceX's preparation for a $1.5 trillion initial public offering tells me more about the limits of patient capital than any quarterly earnings report ever could. When Elon Musk confirms that his space venture will seek the largest public offering in financial history sometime in 2026, he's not celebrating a victory. He's acknowledging a constraint that even visionary leadership cannot overcome through private markets alone. For 7 decades, I've watched how truly transformative companies navigate the tension between ambition and arithmetic, and SpaceX represents the most fascinating case study I've encountered in understanding when private ownership becomes mathematically insufficient for genuine civilization-scale projects. The company's reported need to raise over $30 billion through public markets, targeting a valuation that would immediately place it among the 10 most valuable public companies globally, stems from commitments that dwarf even the deepest private capital pools. Musk speaks openly of requiring trillions of dollars to build the infrastructure necessary for space-based data centers and Mars colonization, numbers that reveal why patient money eventually encounters limits that only impatient public markets can solve. I calculate that this represents more than corporate fundraising. It's a fundamental shift in how we allocate capital for projects that span decades and require sustained investment through multiple economic cycles. The fascinating aspect lies in what SpaceX's IPO necessity tells us about the difference between building a successful business and funding a transformation of human capability itself. SpaceX generates approximately $15 billion in annual revenue, with projections reaching $22 to $24 billion by 2026, creating a business that's profitable, growing, and technically sophisticated, yet still requires external financing on a scale that private markets cannot sustainably provide. I've spent decades studying successful businesses, and SpaceX has achieved remarkable operational efficiency, launching more rockets than the rest of the world combined, dominating commercial satellite deployment, securing NASA contracts worth billions. But these achievements, impressive as they are, generate cash flows that cannot support the infrastructure investments Musk envisions for expanding human presence beyond Earth. The mathematics are stark and revealing about the realities of patient capital in our current system. Private investors, even the most sophisticated sovereign wealth funds and technology titans, operate with return expectations and liquidity requirements that make multi-decade infrastructure investments challenging to sustain without interim monetization opportunities. A $1.5 trillion valuation implies forward price-to-sales ratios exceeding 60 times current revenue, multiples that private markets might accept for breakthrough technology companies, but struggle to justify for operational infrastructure businesses, regardless of their long-term potential. The projects Musk describes, orbital data centers powered by solar energy, reusable spacecraft that reduce launch costs from $1,500 per kilogram to under $100, permanent human settlements on Mars, demand the kind of long-term thinking that built America's transcontinental railroads, rural electrification networks, and interstate highway system. But private markets today operate with shorter time horizons than those infrastructure achievements required. I observe a paradox that will define whether this IPO succeeds. Going public provides access to vastly larger capital pools while simultaneously subjecting Musk to quarterly earnings pressures and shareholder expectations that could constrain exactly the kind of long-term vision that makes SpaceX valuable in the first place. Public company CEOs face constant pressure to deliver consistent returns, optimize short-term cash flows, and justify every major capital expenditure to shareholders who may not share a multi-decade vision for human spaceflight. This tension between capital access and capital patience will determine whether public markets can actually support the projects that SpaceX's IPO proceeds are intended to fund. I measure the sustainability of any business model against its ability to compound value over extended periods. And SpaceX's public transition represents a test of whether quarterly earnings cycles can accommodate projects that may not generate returns for decades. The broader implications extend beyond SpaceX itself to what this IPO signals about capital formation for other civilization-scale projects. If space infrastructure development requires public markets because private capital cannot sustain the investment timelines involved, similar dynamics will affect other transformational technologies, artificial intelligence infrastructure, renewable energy storage, advanced manufacturing systems that require sustained investment over decades rather than the 7-year investment horizons typical of private equity and venture capital. What makes this moment particularly revealing is how it demonstrates the limitations of even the most successful entrepreneurial wealth accumulation in funding genuine infrastructure transformation. Musk's personal fortune, substantial as it is, cannot support the trillions of dollars in investment that credible Mars colonization would require. Even the combined resources of the world's wealthiest individuals would be insufficient for projects operating on planetary scales with multi-generational timelines. I've studied how markets price long-term value creation, and what concerns me about SpaceX's public transition is not the ambition of its projects, but the sustainability of supporting those projects through quarterly earnings cycles and annual shareholder meetings. The most successful infrastructure investments in American history, from the Transcontinental Railroad to rural electrification, required patient capital that accepted delayed returns in exchange for transformational long-term value creation. Today's public markets often reward companies that can demonstrate immediate profitability over those investing heavily in future capabilities. The risk I see is that public market pressures could force SpaceX to prioritize revenue-generating activities over the fundamental research and development that make its long-term projects possible. Quarterly earnings calls and analyst expectations often reward companies for optimizing existing operations rather than investing in unproven future capabilities. Yet the opportunity side of this transition is equally compelling and demonstrates why public markets, despite their short-term orientation, may be the only mechanism capable of funding projects that operate on the scale SpaceX envisions. Public equity markets provide access to retirement funds, pension systems, and institutional investors with multi-decade investment horizons that can support sustained infrastructure investment if the projects demonstrate credible progress and eventual profitability. The technical achievements that support SpaceX's valuation are legitimate and impressive. Reusable rocket technology that fundamentally changes launch economics, satellite internet systems serving underconnected regions globally, spacecraft capability that ended America's dependence on Russian launches. But translating these achievements into sustainable funding for even more ambitious projects requires accessing capital markets that operate by different rules than the private investors who supported SpaceX's initial development. The key question becomes whether SpaceX can maintain the operational discipline and long-term focus that made it successful as a private company while accessing the vastly larger capital pools that only public markets can provide. This will require exceptional communication with shareholders about timelines, milestones, and return expectations, plus the operational capability to deliver consistent progress on projects that span decades. I measure the historical precedent of other infrastructure companies that attempted to balance visionary long-term projects with quarterly shareholder expectations. The most successful cases, companies like AT&T during the national telephone network build-out, utilities during rural electrification, technology companies during the internet infrastructure expansion, managed this balance by demonstrating consistent progress toward near-term milestones while maintaining clear communication about long-term value creation timelines. The timing of SpaceX's public transition also coincides with broader questions about American competitiveness in space technology, infrastructure investment, and long-term technological development. China's space program operates with state funding that enables multi-decade planning without quarterly earnings pressures. European space initiatives benefit from coordinated government support across multiple countries. Other nations are investing in space capabilities with strategic patience that private markets often cannot match. In this context, SpaceX's ability to access American public capital markets for sustained space infrastructure investment becomes a test of whether democratic capitalism can support the kind of long-term projects that geopolitical competition increasingly requires. The success or failure of SpaceX's public market strategy may influence how other American technology companies approach funding for transformational projects that compete with state-sponsored initiatives from other nations. What I find most significant about SpaceX's IPO preparation is how it reflects broader changes in the relationship between technological advancement and capital formation. The most transformational projects today, whether in space infrastructure, artificial intelligence, renewable energy, or advanced manufacturing, require investment scales that exceed what private markets can sustainably provide, but they also require longer development timelines than public markets typically reward. The successful navigation of this paradox will determine whether American capital markets can support the kind of sustained infrastructure investment that technological leadership requires. If SpaceX can demonstrate that public companies can pursue multi-decade projects while delivering consistent shareholder value, it establishes a model for other transformational technology companies. If quarterly pressures constrain SpaceX's ability to pursue its most ambitious projects, It suggests that current capital market structures may be inadequate for funding genuine technological transformation. I conclude that SpaceX's IPO represents a necessary evolution in how patient capital operates at civilization scale, but success will depend on execution factors that extend far beyond the technical achievements that justify the company's current valuation. Public markets can provide the capital needed for genuine infrastructure transformation, but only if companies can maintain long-term focus while delivering the consistent progress that shareholders require. The outcome of SpaceX's public transition will tell us whether American capital markets have evolved to support the kind of sustained infrastructure investment that technological leadership demands, or whether the patient capital needed for transformational projects remains structurally incompatible with public market expectations. Markets reward patience when results compound over time. History punishes denial when mathematics demand change. Time, as always, will collect its return.